I think it depends. It depends on the business, but in general, um, it's a function of the growth. So growth and stability of cash flows enter into the equation. But if if you have a business that has, let's say, absolutely zero growth, it's just going to sit at the same level of cash flows, but it has very high stability on those cash flows, kind of like a utility, almost guaranteed to come in. Then I would say a business like that is worth at least 10%. I mean, at least 10 times cash flow. You might go a little bit higher in a very low interest rate environment, might make it 12 or 13 or even 14 times. So I would say that a business like that is worth, let's say, 10 to 14 times cash flow. And so if you can get it at, five or six times cash flow, the odds are good that you'll get a double out of it. Now, if you get a business that has stability of cash flows, but the odds are high that they might grow up at some small rate, let's say 5 to 10% a year, then that's worth quite a bit more. That'd be at least 15 times in my book. And sometimes you get to businesses. I mean, one of the stocks in my portfolio right now is a company called Horsehead. The ticker symbol is zinc. And I'm not saying this to talk about the business, but they have kind of two facets to their cash flows. One facet of their cash flows is somewhat independent of the price of zinc. So if zinc prices stay where they are today, which is pretty low right now, these guys may produce somewhere between 130 to 170 million in cash per year from that business if zinc prices stay where they are. And that might start coming up in a year or two after they finish some investments that they're finishing off. And so it's a company that has a market cap of 700 million. And so, on the low end, if you look at their, low hundreds type cash flow, let's say 120 million or something, or 130 million, it's at like 6 times cash flow or something. But, zinc prices could collapse like they did, in which case cash flows would go down. But also the flip side is that for every 10-cent increase in the price per pound of zinc, their cash flows increase by 25 million. So they're very highly levered to the price of zinc. So zinc is, for example, currently at about 85 cents a pound. And the historic range, the last few years, the historic range on zinc is like 50 cents to $2, for example. And 50 cents is the price when the world shuts down, kind of like financial crisis when no one is using anything. So that's kind of unlikely. I think it's unlikely to go below where it is right now. But it's not outside the realm that in the next few years, zinc prices might be $1.30 or $1.50 or even $2. That could happen. And so you have this kind of low end, you can say 120, 130 million of cash flow, and extreme high end, you have like 280 million of cash flow, right? So what's a business like that worth? Well, I don't know what it's worth, but I think it's worth more than where it's sitting at right now. And so you would look at those sorts of, in effect, what a business like zinc is giving you is giving you a free option. I'm not paying for those zinc prices going to $1.50 or $1.30 or whatever. If that were to happen, almost for sure that stock would move in a very significant way. And so, I like free options where you have upside without downside. So I think it depends. I think when you're looking at these cash flows and such, how stable are they? how variable are they? And in fact, in businesses which have high variability of cash flows, you can get wider gyrations from intrinsic value, which creates the opportunity to do something with it.